This video is sponsored by Bityard. With over 400 cryptos to trade on their spot, perpetual coin futures, USDT futures, with leverage of 1x to up to 125x, you can trade foreign exchange, commodities like gold, silver and oil, and traditional markets like Nasdaq, all with some of the lowest fees available on any trading platform. You can use their copy trader to copy other traders with better performance than you, or you can become a copy trader yourself and earn a few extra percent from the people that follow you. Plus, you got 9 out of 10 stars from the Coin Bureau guy. Bityard! Hello everybody, welcome back. So we're going to talk about boring old inflation just for a little bit of time, okay? And we will look at the Bitcoin price. We've got the CPI data, it's coming out at some point today. There's one thing that we can guarantee with that, which is volatility, all right? So let's have a quick look at this. So this is obviously your CPI official data. There's a site called Trueflation, which gives its own opinion and its own little up-to-date targets, I suppose. And we can see that as far as this is concerned, Trueflation, which I'm not entirely sure how they crunch these numbers. Interestingly enough, it's all done through Chainlink's Oracle. But yeah, I mean, this would suggest that we've already reached a peak anyway, and we are slowly but surely coming down. But it does give a much higher read of inflation than what we've got at the moment on the official figures. No, yeah, that's just neither here nor there. We tried to call effectively a peak, or monitor a peak, should I say, due to commodities. And as we all know, commodities have been coming down dramatically this last month. In fact, most commodities found a peak in March, but we started to see a real pullback and what might be a breakdown now on most commodities charts. This will affect inflation, definitely. It will bring it back down again naturally, you know, through its own accord. But is it enough that's taken place this last month or so to reflect on June's inflation data, you know, the CPI that's coming out today? Probably not. So we'll just think about oil, which is one of the main things to think about. So we found a nice big red monthly candle last month, but really, if you think about the body and open, it's still more or less the previous months, and it was higher than the months before that, and the candle close of the month before that, and so on and so on and so on and so on. And so if we think about what we saw on these ongoing months, you know, maybe this one, despite having a candle body closure that was technically the same as this one, and it would have been higher than this one and this one and this one, might not bode well for this very moment in time to expect oil to reflect with the CPI data that's coming out today. As far as the DIX is concerned, well, I mean, it's off to Mars, isn't it? It's off to Uranus. It's going right up Uranus, to be honest with you. And partially, I would say this is down to the euro, which is one of the major trading pairs for the dollar. One of the biggest currencies. It probably is the biggest currency that makes up the Dixie, and it's getting wrecked, absolutely wrecked. This, without going into too much detail, is largely to do with all the sanctions and the way that they've positioned themselves, you know, against Russia, really. So refusing to take on the fuel and oil and gas that they were so heavily reliant on prior to the invasion, and the sanctions on top. They've basically screwed themselves, which is, I can understand the morality to it, but the reality is that they're probably going to hurt harder in a lot of ways than Russia. And this is reflecting slowly but surely on the euro right now. I mean, look at the state of the euro. Just look at it. I mean, from its peak over here in 2008 to where we are right now, 37% down. Now, we have been lower than this in the past. We have, but we are trending down. This is a very, very bearish chart. We've got short signals on the monthly chart. And with people who think that we might bounce around 1 cent, well, 1 for 1, well, we might, but it's unlikely that that is a sustainable target for it to remain at. And the only thing that's going to change this direction is on a fundamental basis. And like, the euro is complex, right? This is part of the reason why I think, you know, the UK never wanted to share the euro's currency. So we'll stick with our sterling. You know, it's old. It works. You know, it is what it is. We don't want any part of that. And thankfully, we never went that far. Even though the pound is getting wrecked, you know, as bad as this. You know, the euro is so complex because it takes in so many different countries of all different statuses, really. When you think about their GDP, I mean, it was never really, I was amazed that it was ever designed to work You mean it's just it just doesn't seem realistic. Well, anyway, now we're seeing the reality of it, sort of, and the vulnerability of the euro being exploited by these sanctions, which are hurting a lot of countries really badly. And we're in mid bloody summer at the moment. Can you imagine how hard it's going to get hit as their stance on on fuel, for instance, energy costs get exploited further into the winter months. So yeah, it's not looking good at all for the euro. So the reason we bring up the euro is because the euro is the biggest trading pair within the Dixie, and this is just going to cause it to continue to go up. And then it's insult to injury. Inflation will start to go skyrocketing over in Europe because, you know, we think about the barrels of oil traded with a dollar, lots of things. The dollar is the world reserve currency. So if the dollar is skyrocketing against your little currency, and then all these things cost more than they did anyway, it's a double slap in the face. You're paying more with a weaker currency. It's two slaps in one basically, and it will cause a spiraling effect. And there's I don't see any end to it with this kind of position that they've taken. And, you know, it's not for me to get my nose into geopolitical events, but I mean, the only way to stop this would be to stop sanctions and try and bring down fuel prices, which would mean, you know, accepting Russia's fuel, but accepting it at lower prices, you know, turning the taps back on, sucking it back up, getting rid of the sanctions. I know it sounds silly, but I think that's the only way that this can be resolved, really. This doesn't seem as though it's going to ever move in any other direction than this. It looks awful. Short signals on a monthly chart with that currency pair. So yeah, there's nothing going to stop it. It's wrecked, and it's going to continue to get wrecked. And the pound will get wrecked too, but I mean, the euro is really, really wrecked. Anyway, so we've established that none of this is going to bode well for a CPI data this month anyway. It just doesn't look feasible. We might have a smaller, ever so slightly smaller inflation read, but I'm not looking for anything dramatic, not yet. But think about this I don't know if anyone's ever seen this. I don't know how much to take it seriously, but this is a site called Trueflation. It's actually done on the Chainlink's Oracle, and this is what they claim to be crunching their own numbers to give a bit more of a realistic and up-to-date read of inflation. So as far as this one is concerned, it believes that there was an effective peak around April, and we've been going down ever so slightly since then. Interesting to note though that the inflation figures here are a lot higher than the official ones. So as far as this is concerned, it has been tailing off since March, and that would match the things like oil and wheat and iron ore and all the other commodities more or less finding peaks in March. That makes sense. When we think about this, we find peaks, and that matches commodities. Okay, fair enough, but it doesn't take really on board, from what I can understand, the currency aspect of it, which is a big deal. So there is still hope that we start to see a peak, and we may actually see a peak, but if we did, it'll be something similar to this, where there was a peak and the next peak is ever so slightly lower, but it's not going to change the Fed's stance. So to wrap it up, I mean, you know, we did do quite well this last month. It's been a decent trading month. You know, we more or less called the top on oil and all these other commodities. We called the lows on equities and stocks. You know, some really decent gains have been made just this last month, despite, you know, higher inflation and the Federal Reserve monetary policies. But I think it's very early days to expect a significant top from what we can see here, and especially with what's going on with the euro is probably one of the main reasons, because that's going to cause a Dixie that goes, you know, like I say, right up Uranus. So let's have a think about Bitcoin, shall we? So this is Bitcoin, your 4-hourly chart. Okay, fair enough, nothing particularly special. So we peaked ourselves around here, and we've been coming down using this 4-hourly 10 exponential moving average as a resistance, and we've done that again on this candle body. It's only just open at the moment, getting rejected once again. So fair enough. Where's the destination for this one? So we found a bit of a temporary relief around 19,300, and if we look ever so slightly in this chart, we can see that there is basically a tiny little bit of temporary support around here with those tops, and a little bit around there. And if this breaks down, then fine, we could probably handle 19. I think our trading range is going to be between 19 and about 20,000, probably about 20,500. Breaking above there, gets back up to the top of the range, but none of this looks very good. We've got a short signal here on the 4-hourly Ichimoku cloud. That's due to play out any minute, to be honest, if it were to play out, if it hasn't already. The momentum is not diverging. There's no divergences on the 4-hourly, so it's full bearish mode really. The best you can ask for would be a bounce to the mid 20,000s, maybe upper 20,000s at best. I don't see it being possible to move above there at this stage right now. And like I said yesterday, yesterday and today is a non-trading day. You sit back and just watch the charts and just wait for the inevitable CPI data to come through, and then markets to start panting all over it. There's nothing really that can be done until that happens. So I would just say very much like just sit back and wait and watch the shit show, because that's basically what it's going to be. Whether everybody starts FOMOing into a tiny little inflation figure going down or inflation going up and everybody's selling that as well, we're about to enter into a new range, for better or for worse, I would say. And if it is for worse, then let it be, so be it, that's fine. We'll enter into a new trading range like we have done this last time that we dropped down. So we had a big drop down, went into a range. We dropped down again here, went into a range. What's going to happen now? Well, it could be that we drop down and enter into a new range. This could be the nature of how Bitcoin's going to find itself bit by bit, week by week, month by month, until the overall direction reverses and changes to the up. And for those of you that haven't seen this is basically Bitcoin to USD on the long-term time frames. Turn off this log scale, turn off this noise. So this is the 4-year market cycle for Bitcoin. This is what we look at here. We'll put it on log scale as well. So this is all we need to think about outside of all the madness which is going on in the world. So we've got white lines represent halvings, and in the middle of the halvings we find peaks and lows, peaks and lows, peaks, and somewhere along the lines there's going to be a low. So there's your bull market top, there's your bear market bottom, bull market top, bear market bottom, bull market top, and then at some point bear market bottom. And before we get to the next halving, we already start the bull market. The bull market's usually determined way before that, 360% up, fair enough, that's quite nice. This one rallied 196, that's fine. So from wherever we might find our way down to, whether it's 14,000, 12,000, 10,000 or whatever, before we get to the next halving, we would have already started a new bull market. And if we look at this, generally speaking, within the first quarter, so this is usually about a year after the halving, give or take, we find our peak. Same over here, about a year and a half or something after the last halving, we find our peak. There's our halving, found a double top peak, but the tops and the bottoms are formed within more or less the center between two halvings. So you would be looking for on a time on time wise that we are looking to put this in probably this year. The bottom gets put in this year, maybe as early as September, but from what I can see, it wants to be put in between September and November, maybe early December at the latest. And so that's what we'll be looking for in this Bitcoin chart, without even thinking about things like Dixie and oil and CPI. Its own market cycle is still very much intact and behaving pretty much as well as it has done in the previous ones. And so, like, if you're looking to dollar cost average or just sit on the sidelines, one thing you could just think about doing is just sitting the whole thing out between now and December. By December, there's nothing wrong with buying into an uptrend or buying into a bull market, should we say. That's probably the best way to look at it, because that's exactly what I did on the last bear market. I sat the whole thing out. I sold XRP I bought around $3. Bought around 3 cents, sold around about $2.80, and then never got back in again because everything looks devastating. It very much looks like a speculative asset popping and going to zero. So I was waiting and waiting and waiting, studied it a little more, waited for the 4-year market cycle to start to complete, and bought as we started to see a change of behavior around 3,800. I wasn't getting clever and dollar cost averaging into it, so I wasn't doing any of that. I bought around here, and lo and behold, we went straight up. Then we went down for ages, and we basically went sideways for the most part. So I try to explain this sometimes on the channel, but if you think about what we see, generally speaking, if we use this bottom around here, about 7,000 as a medium area, so this was pretty much the trading range for Bitcoin, which is less than 100% for about 6 months, more or less. Most people wouldn't have got in at these lows where I did. Most people would have got in around here, and so the average price would be roughly about 7,500 for most people. And if that was the case, you'd be in a sideways static environment for about a year and a half, more or less, or a year and a half. So boring and sideways, and then just this is the nature of crypto and Bitcoin. It's not always only straight up to the moon. You do have moments where this happens, but for the most part, you are in a range. And for the moment, we're not really in a range. We're in a downtrend, and so with that, by saying we are in a downtrend, which is the reality of what we are, do you want a dollar cost average into it, or do you want to wait for the market cycle to complete? It's completely your choice. I wouldn't blame you for waiting it out, because like I say, that's exactly how I played the last bear market. But I am able to trade these bear markets a bit more now. I've got more free time and blah 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 blah. But still, if you don't have the time to sit around trading appropriately, then sit the whole thing out. I would say sit the whole thing out. Wait and see where we go between now and December. Because we could go a lot lower than this, and that's the reality of it. And we think about all the things that no one ever thought is possible, like euro just turning to dust in front of our faces with there's no way out for them unless they change their whole outlook on Russia. There's no way. And so with that in mind, I'll leave it with you there. And let's hope that the true inflation data reflects at least a small peak, if anything. But it's not going to change the Fed's policies. They're going to continue to hike those rates. And that's fine, because inflation is a bigger problem than equities going down. And if you're anything like me, equities going down is good anyway. We want that because we can buy them at lower prices. Same with Bitcoin, same with altcoins. So it is technically good, and it's good all around. Inflation, we don't want to be buying loaves of bread for £1 million. Not that we will, but we could. And we this is the best of both worlds. Let's just sit back and watch the shit show, which will be at some point today. Anyway, I'll leave it with you there. Thanks for watching. I hope you have a nice day. Take it easy.